Hello, everyone. Welcome to a new episode of One Vision, the FinTech Fuse. This is Theo and Barb welcoming you for another episode. Joining us today is Tracy Lagasse, VP of Sales and Customer Engagement at Dye Durham Corporation. And welcome to the show, Tracy.
Thanks so much, guys.
Thank you. So let's jump right into it. There's tons that we want to talk about and cover today. So we've heard a lot of people that have often talk about the demise of incumbent banks and how fintechs will eat bankers' lunch. It's been talked about for quite a while now, but fast forward to where we are today, 2025. How do you see the core competitive advantages of traditional banks evolve in an era where we're often talking about how big technology companies are offering financial services, and looking at where we are with these big banks from a historical strengths perspective? What is still relevant and what do we need to change?
Yeah, I would say, it's interesting because if I go back sort of a decade, I've sat in the fintech side, I've sat in the big bank side, and I've also sat in the big tech side. And over the decade of being in all of those scenarios, the one thing that I think I still walk away with over a decade later is everybody has their role, and no one seems to go away. It just seems to evolve in terms of who's getting what customer, what product, what experience. And I would say the role of the incumbent legacy bank, and this would be true, I'm based in Canada, but I've worked across the Americas, so Canada, US, LATAM, and in some global banks as well, is the large banks do have trust. And they have trust because we know if they're a federally regulated financial institution, they have backstops, they have checks and balances, they have insurance to protect your money. There's a trust that if something happens, they may actually cover the liability of it. And they're not an unknown quantity. And so they have the trust, they have the customer base, they have the deep enough pockets to satisfy the regulatory requirements to work in such an industry. So they're not necessarily going to go away if a market change happens quickly. And so I would say the fintechs and the big techs, yes, they're taking some market share from the banks, but the banks aren't going to go away, and they're evolving in terms of how they take advantage of partnerships, collaborations, new business models, expanding into new markets by actually working with these fintechs or big tech. Like even if you look, I think several years ago, one of the large Canadian banks did a partnership with one of the big tech firms. They weren't in the US market at all. And so they created digital products so they could actually get into that distribution channel within the US, but their primary market and the primary country, they didn't do that partnership. So there's lots of different models we see in terms of how large incumbent banks are staying competitive in their core markets, but partnering for expansion products, new customer experiences.
I really like the idea that you're sharing there, that this is an additive relationship. This is not a zero-sum game between any of those pieces, and they all have a part to play. So, talking about those bank side of the relationship a little bit more, I think those traditional institutions have maybe struggled to modernize their infrastructure. A lot of them have been built upon multiple mergers and acquisitions over the years and just acquiring new technology, but, having a hard time rationalizing it perhaps. How do you do that while you're maintaining the day to day? Because it's not acceptable to be down or your customers can't get access to their money at any given time. So, you've played all sides of this coin, I guess. What approaches have you seen work well for managing that, change the engine while you're flying the plane problem that these institutions have?
Yeah, it's interesting. My most recent experiences in working with Microsoft, the primary mandate was actually helping large financial institutions, large even ISVs or solution providers that were also still on legacy technology, also part of the role I'm in now, in terms of how do you actually modernize. Everybody, I think, is well aware they need to modernize for a number of reasons: operational efficiency, customer experience. But there are a number of approaches, And I wouldn't say it's one size fits all. Each one, and I've gone through this several times with each financial institution or partner we work with, there are approaches. So you have the, big bang, if you want to call it, or rip and replace, which is potentially the fastest, but it's the most risk, and you get everything that you want. You have, an API strategy where you leave everything legacy just in place, start integrating on top of it, start, more access to service, a little more band-aids, but you're delivering on the customer service. You're not having as much risk. Then you have sort of this incremental approach as well. And I would put this incremental approach and this concept of unbundling together. And I think what we saw was, decades ago, the banks bundled everything together. So your CRM system was in with your core banking system, was in with your payment system. And then fintechs came along and started spraying at the edges and unbundling. We heard that all the time. It's unbundling. You go to this person for your mortgage, this person for your payment, this for your onboarding within your mortgage. And now it's like this cycle. It's rebundling again, but it's smarter bundling. And so we took CRM out of core banking as an example. We took it out of your ERP, but customers are expecting a one-stop shop. They don't, and if you're a large bank, you don't want to have 800 vendors to bring across one, onboarding process or one mortgage journey or one payment journey, whatever it is. So customers want not as many apps as they've had before, and that requires large institutions to be smarter about how they tie these services together. So I think if I'm in the business for another decade, I'm going to see 2 more cycles of unbundling, bundling, rebundling, that sort of thing.
I want to do a follow-up. I want to ask a follow-up that what you were just mentioning, consumers want less apps, right? And then if we look at the landscape perspective, we have so many players, and we seem to be having more and more third parties, especially for smaller companies, right? Where you cannot develop things by yourself and you rely on a third party vendors or multiple of those, which is creating a completely different risk landscape compared to before, right? And so we've seen earlier when we first started talking, we talked about partnerships and collaborations, different strategies, depends on where you are. So looking at where we are right now, 2025, it seems like we're getting a little bit more excited, should we say, in this space. I'm treading very carefully here. We think that there will be some funding coming back. We think that there will be more M&A, at least, based on the figures from end of last year. Where do you think collaborations and partnerships will go this year? And where do we decipher? Because that forever question, do we partner? Do we build? Who do we partner, right? Those questions are still valid regardless of where we are.
I think like a really interesting, we've had a couple of accelerants. And, COVID, I think we've talked that one to death for years, but it really was an accelerant in terms of digital adoption. People did, 2 years of transformation in 2 months. And now AI and generative AI, I would say that is another massive accelerant. And it's a massive accelerant in a couple of big buckets. So if we think about financial crimes, fraud, anti-money laundering, all of a sudden these tools are out there and they're really powerful. And they're out in the wild. They're not under the government control. They're not under the financial institution control. There's a whole bunch of people that are out there doing good things, intended good things, and with potentially unintended consequences, which we don't know about. There's impacts on human capital. There's impacts on productivity. There's all kinds of bad actors out there that are taking advantage of, and I wouldn't just say vulnerable populations like youth or seniors or people without digital access. Like they're very, very sophisticated criminal networks. And so, where do I think it's going? I think in certain pockets, and I'm seeing this, and I use FinCrime because I think when we talk about opportunities, I think that's a really great example of where there's a market need to move faster in that particular domain. I'm sure you guys could probably share with me some other domains that you see sort of more prevalently as well. but there's a market need for the safety and resiliency of our economies to move faster in that particular area. And what I'm seeing is financial institutions now are looking at it, and this is one of those areas where they have incumbent technology. The partners that provide this stuff are massive incumbent providers, and they can't just keep throwing more and more bodies at solving these problems. So they also have increasing regulatory requirements. And so now financial institutions, or the ones I like to work with and talk with, are really being smart about, this is my end-to-end process. This is everything. Here's what I have. Here are my gaps and my vulnerabilities. Who are those partners out there that are actually innovating way faster than I can, that fill that gap and I can put into my process to help me be more efficient, take advantage of the technology, get increases in operational, skill my people, change the way we do business. I see similar things happening around customer experience. But I think when I look at something like generative AI and how quickly we're seeing that take off in certain segments of financial services, you can see the appetite for financial institutions to partner with them, and they're developing the muscle very, very quickly on how to bring in a fintech, how to partner. And I guess alongside with that, I would also say, I guess advice or observation, like what works, what doesn't, is they're getting smarter about narrowing the scope of work with fintechs. So I think there's a tendency for large financial institutions to bring in a fintech because they could do something, and then they either customize it so it's no longer recognizable, or they ask them to do too much beyond out of scope that they weren't good at. And I think what the large financial institutions that are successful at partnering are being very pragmatic about, this is what I need, these are my options, and this is how I can actually take advantage of it in my process.
Do you think there's a recognition as well that maybe those relationships and their duration or use is changing? So you're talking about some are recognizing, I better use you for the one thing that you're good at and not ask you to go to unnatural acts for the things that you aren't. As this sphere is changing so quickly around us, as you've talked about, do you think there's also recognition that maybe we're here for a good time, not a long time, in a different way than we used to be? We're not going to be married here forever. You're going to help me solve this problem for now, but there may be an end date to where that's useful to me anymore. Have you seen some of that taking root as well?
Yeah, absolutely. Because if you think about now, if you step back and, Barb, I know this is your domain far more than mine, but if you think about how people are actually designing architectures, modularity, containerization, being able to not only decouple themselves from a partnership, but actually deploy that anywhere that they want to go. So financial institutions and software vendors, everyone is now designing in that modular approach so they can almost move these things around like Lego blocks, connect them, disconnect them, deploy them in different strategies. Absolutely.
So I know there was a recent article that caught Theo's eye that she wanted to help us raise to talk about what these larger financial institutions might be thinking. And it was a New York Times headline that said, it's a good/great time to be a big bank. And so, playing on the thread that Theo thinks there's maybe some optimism on the rise here across the industry. A lot of these bigger banks probably feel that optimism from a deal-making perspective, right? Acquisitions are potentially, on the table for many this year. So what do you think about that from, less from a technology perspective, but where those, maybe game-changing relationships may play out this year or upcoming?
Yeah, I think, and I won't get into a political commentary, but I do think the politics in the U.S. market with a change in leadership is creating optimism within the markets that deals will be able to be more easily done. And that is creating, so there'll be less barriers, there'll be potentially more appetite for innovation, and I do think that financial institutions, and I think we sort of started there even in the original question, that have the processes in place, the financing in place, the regulatory conditions already met, are able to make that shift fairly quickly. So I would agree that it's a really great place for financial institutions to be right now. And even if you look at things like open banking, and us in North America, we're still like a little bit slow to adopt. But if you look at European markets, and I won't criticize, I'm not criticizing, we just are a little bit slower to adopt. But if we look at consumer directed finance or open banking, whatever you want to call it, the original fear was that from the large incumbent banks, oh my God, we're going to put all that data out there, and all of these fintechs and startups are going to eat our lunch. But the reality of what we actually saw happening were the large financial institutions were actually consuming more data than the fintechs were consuming. And that really creates this opportunity because the financial institutions, they have the ability, they can comply with GDPR laws, with privacy laws. They can actually combine that data and play on the advantage that customers do want to have they don't want to have 20 apps for their financial situation. They actually really would, if you can give them the customer experience, they really would prefer to go to, and I think that's what the data, hopefully it's not just a Tracy Lagasse opinion, but they really would prefer a seamless experience, one shop. And I know they're shifting towards who they prefer to have that offered by. And they're more educated, less loyal, more mobile than they've ever been before. But incumbent financial institutions do have a bit of an opportunity to consume more data, to buy, to partner, to fund the experiences that I think the market and the customers are expecting. And that's both on consumer side as well as business side.
So if I were to pull that thread a little bit more, right? Earlier, we talked about the accelerants that we had, COVID, and also artificial intelligence. If we think about what are the ingredients that we need for a financial institution or any tech company, if you will, to be successful in leveraging AI and making it work to create new solutions, new value, you need data, which you just talked about, right? Big banks have access to and they're able to consume more data. You also need resources in terms of capital as well as talent. And again, here, advantage big banks because they can have access to more capital and to do more things, to attract more people. In that sense, do you think that we are entering an era where there's optimism on one side, there's capital on one side, there is the eagerness to make things happen, and then you have the few, which is the money, is burning money. Do you think big is going to get bigger in that sense?
Do you mean in terms of
bigger banks is going to pull ahead in terms of competition, in terms of being able to leverage technology to do more for consumers, to create a more streamlined and seamless experience? Because that's one thing I've been very curious about. In one sense, technology is supposed to be able to level, right, the playing field, but on the other hand, to use tech to your advantage, you need data, you need resources, you need people, you need all of those things, and you need a risk appetite, right? You need to be able to make risk. And so, when we start thinking about that and start thinking through who can afford to throw things on the wall and see what sticks, who can afford to maybe play a little bit riskier and not worry about regulators as much, right? So I'm very curious, if we start going down that path, where do we see the traditional institutions, namely the larger one, how would they play out?
It's interesting because, like, on one side, they actually have the resources to be able to do it. They have the data, but they also are very conservative. We talked about the thing that they probably, one of the biggest assets I think they have is the trust.
Mm-hmm.
So from a risk perspective, a regulatory perspective, a privacy perspective, there are some real barriers to them being able to move as fast as probably they'd want to. And I think this goes to the theme, I think, of the conversation. And I think there's an opportunity for big tech and financial institutions to level the playing field. And I think they do that by they're looking at fintechs that actually are moving faster. They're showing what's possible with AI, with technology. They're bringing it to larger players, and those things are hitting labs or they're hitting the market. I don't think I've seen yet who the winner is going to be in the space. I think financial services in particular, I think the banks will get bigger because people are a little nervous about the impacts of AI, and they will trust that if things go wrong, potentially, the government is backing, the financial institutions are backing. So there'll be a little bit of trust for adoption there, but I don't believe the banks have the ability to move as fast as the market is going to move. And so I guess I don't have an actual winner for you on it. Are they going to get bigger? If they do get bigger, it's going to be because they were smart about who they partnered with for either distribution or product, not because they did it all themselves.
I think that's fair, because that's the one question that's been bothering me for the last year. If you look at the trajectory and you look at, for example, one of the indicators, not the only one, but one of them is looking at the ability for banks to file new patents, right, and to invest in particular areas. And you see the JPMs of the world, the Bank of America of the world, they're literally pulling ahead. But in the same token, they are also a little bit more, shall we say, intertwined, and the risk appetite is a little different. Their infrastructure, the tech stack is probably a little bit more complex and older. So it almost feels like, is it going to balance out, or what will the future hold? I don't know. I was asking you for a crystal ball.
I think we only have to wait 6 months. So I don't think it's like a 10-year decision.
Oh boy. Ouch. Oy vey. All right. So, looking ahead in the next 5-10 years, what role do you think they will play in the broader financial services ecosystem? Because we've seen, let's say, looking back at the last decade, right? We've seen some of the big techs in Asia that have pulled ahead. You have the Alipay, the WeChats of the world. You have the UPI in India. You have a lot of different companies, Gojek and Grab in Southeast Asia. And then now you have LATAM, right? That's doing a lot of interesting things, for example, with Pix. Where do you think we will play out in North America?
You know what? Here's what I'd like to see, I guess, happen with the financial institutions, whether it'll happen or not. Like, if we look at the retail side, if you think about banking from a retail banking perspective versus a commercial banking perspective, in the retail banking, you talked about all of the real-time payments networks coming on board, and barriers came down. We're flooded with pay techs that were able to really, transfer money in, lightning fast with lower fees and really sort of satisfy that customer experience. And we see a lot of partnering. So whether that's through Uber or, WeChat or Alipay, like, we're seeing all of these models where the margins in consumer retail banking are really being squeezed. And the value to a financial institution really in retail is maintaining their deposits and their customer base. And, it's still a little different, I think, in the commercial side because of the complexity of that business, the relationships, the dollar values that we're dealing with. So, but I do see that trend eventually making its way into the commercial banking. So if I were to use that as that's sort of the trend of what's happening, I would like to see financial institutions almost play this centralized role where they are a platform for financial services needs. And so, they have the customer base, they have potentially the global scale, they have the privacy, they have the regulation. They are the financial services platform, if you will. And then customers, consumers can go there to interact for, services that they need, whether that's, a mortgage or a bill payment, a car loan, a retail bank, a wallet. But I think I don't want to say banks are going to become infrastructure, but I think they have an opportunity to be centralized service provider for financial needs. And that could be them also partnering for, and I look in Canada as an example because I'm located here. I see the banks through the, Bankers Association pulling together these consortiums of big tech and telecom and government to fight anti-spam across the entire country. The banks are leading these safety initiatives that ultimately affect the global resiliency of our financial systems. And I think they have a role to play there in that platform. And I would hope they would provide, wherever possible, these centralized services based on the data they have, the customers they have, and the processes that they have.
It's going to be an interesting time. I do remember reading, some of the comments on social that, banks do have a huge role to play in identity, for example, right? Because, hey, like it or not, that is where most of our lives is, the movement of money and where we are and who we are and where we will be going. So that makes a lot of sense. But thank you so much for joining us, Tracy. I do look forward to hopefully meet you in person one day. And congratulations on your new role.
Thank you so much.
Thank you so much for joining us. And for the rest of our listeners, thank you so much for joining Barb and I for another episode of One Vision. We will talk to you next week.